Question 1. The fundamental question is, how should a policyholder approach coverage selection when deciding between an occurrence policy and a claims-made policy for liability protection? A claims-made policy covers incidents occurring during the policy term, regardless of when they are reported. B. An occurrence policy only covers incidents if the claim is reported within the policy term. C. A claims-made policy covers claims reported during the policy term, regardless of when the incident occurred. D. An occurrence policy covers claims made during the policy term, even if the incident occurred before. Answer. Correct answer. C. Explanation. In a claims-made policy, coverage is triggered by when the claim is made, not when the event occurred. This means even if the incident happened years ago, it's covered only if the claim is filed during the active policy period and within any retroactive or extended reporting dates. On the other hand, an occurrence policy covers incidents that happen during the policy period, regardless of when the claim is made. Understanding the trigger is crucial in determining policy appropriateness. Indiana follows NAICS model regulations which clarify these triggers under commercial liability contracts. Question 2. When considering business continuity coverage, what is the most appropriate approach for a retail business seeking to recover not only lost income but also costs of setting up a temporary store after a fire? A. Add a blanket property endorsement to extend building limits. B. Purchase business income and extra expense coverage. C. Rely solely on general property coverage to handle the loss. D. Use commercial umbrella insurance for additional payouts. Answer. Correct answer. B. Explanation. Business income and extra expense. B. Coverage compensates for lost net income and extra costs incurred to continue operations such as renting temporary space, hiring expedited services, or installing interim systems. Indiana commercial lines regulations align with ISO forms where this is an essential endorsement for retail and service businesses, especially after catastrophic losses. General property does not pay for lost profits or operating costs. Umbrella coverage provides excess limits but not direct expense coverage. Question 3. To illustrate this point, imagine Isangela Torres applies for commercial property insurance and knowingly omits that the building had recent fire damage. A fire destroys part of the property 2 months after policy inception. The insurer denies the claim, citing misrepresentation. Which principle justifies this action? A. Aleatory contract principles. B. Doctrine of utmost good faith. C. Reasonable expectations doctrine. D. Indemnity clause breach. Answer. Correct answer. B. Explanation. The doctrine of utmost good faith requires full honesty and disclosure during underwriting. The material concealment, like hiding past losses, violates this principle and gives the insurer the right to rescind or deny the policy. Indiana Code Title 27 allows such denial if misrepresentation or concealment materially affects the risk or insurer's decision. The other options relate to different contract doctrines but do not address the truthfulness obligation central to underwriting. Question 4. The development of remote sales teams using personal and rented vehicles has led many businesses to reassess auto liability, which coverage best protects the business when employees use their own cars or rent vehicles for business use. A. Garage keeper's legal liability. B. Driver the car dock endorsement. C. Hired and non-owned auto HNO coverage. D. Physical damage coverage. Answer. Correct answer. C. Explanation. HO coverage is essential when a business is liable for employees using personal or rented vehicles for business purposes. Indiana law recognizes that employers may bear vicarious liability for actions done in the scope of employment. This coverage does not cover employee-owned damage, only the business's liability. DOC protects individuals without personal auto insurance, not businesses. Physical damage handles damage to owned vehicles, and Garage Keepers covers customers' vehicles in repair shop. Question 5. In the context of coverage gaps, Mr. Kelvin Brooks operates a bakery and recently added expensive refrigeration equipment. He didn't notify his agent. Power surge damages the equipment and his claim is denied. What key mistake did Mr. Brooks make? A. He failed to renew the policy on time. B. He relied on BOP to cover all risks automatically. C. He did not request an endorsement to cover the new equipment. D. He didn't have general liability insurance. Answer. Correct answer. See explanation. Endorsements modify or expand policy coverage. Equipment not listed, especially high-value property, often requires a scheduled endorsement or equipment breakdown endorsement to be covered. Many BOPs do not automatically include all new property unless specified. Indiana insurance contract law and ISO forms treat unendorsed or unscheduled property as excluded in standard forms. The failure to notify the insurer means the risk was never underwritten. Question 6. A critical examination of insurance contract formation reveals which of the following is not a required element for a legally binding insurance contract in Indiana: A. Legal capacity. B. Offer and acceptance. C. Consideration. D. Insurable interest must exist at the time of offer. Answer. Correct answer. D. Explanation. The 5 required elements of an insurance contract are offer, acceptance, consideration, legal capacity, and legal purpose. While insurable interest is crucial, it must exist at the time of loss, not at the time of offer. Courts in Indiana have consistently upheld this distinction. A lack of insurable interest at inception may raise red flags, but it's not a contract invalidator unless it continues through to the bid. Question 7. Based on the information, which scenario best reflects the appropriate use of inland marine coverage? A. A building is damaged by a hailstorm. B. Office equipment is destroyed by fire in the insured building. C. A contractor's tools are stolen from job site trailer. D. Store's inventory is ruined by plumbing leak. Answer. Correct answer. C. Explanation. Inland marine insurance covers mobile property or property in transit, such as tools and equipment used at various job sites. Unlike standard property policies that cover fixed locations, inland marine fills a vital gap. Indiana policy forms follow the nationwide marine definition, which governs what can be included in inland marine policies. Job site coverage is specifically excluded under traditional BOP or commercial property unless endorsed. Question 8. To better understand indemnity, suppose it is Preassurance, a commercial building insured for replacement cost. After a storm, the roof is severely damaged. She submits a claim and receives a settlement equal to the cost of a new roof, where insurance principle is at play. A. Indemnity restoring her to pre-loss condition. B. Aleatory principle due to unequal premium exchange. C. Adhesion due to fixed contract language. D. Subrogation transferring her right to sue the roofer. Answer. Correct answer. A. Explanation. Indemnification aims to restore the insured to the same financial position they were in prior to a loss. No better, no worse. Replacement cost policies do not account for depreciation and are considered form of indemnity and property coverage. Indiana courts interpret this as non-profit windfall, ensuring the insured is not unjustly enriched. Subrogation would apply after indemnity when the insurer recovers from third party. Question 9. Among the various reasons a claim may be denied, which best illustrates a material misrepresentation? A. An applicant forgets to list a previous claim from 10 years ago. B. An agent makes a clerical error in putting a VIN. C. An applicant states the business is offer solely, but it handles flammable materials. D. The insured misspells their last name. Answer. Correct answer. C. Explanation. Material misrepresentation occurs when a false statement significantly affects underwriting decisions. Claiming that a business does not deal with hazardous materials may cause the insurer to issue a policy that it otherwise wouldn't, or at low premium. Under Indiana Code SS 27414, this is grounds for rescission or claim denial. Clerical errors and minor omissions are generally not material unless they change the insurer's risk profile. Question 10. Historically speaking, how is a licensed insurance producer expected to handle premium payments received from a commercial client? A. Retain the payment for 30 days before transferring. B. Deposit into the producer's operating account for business use. C. Immediately forward to the insurer or place in trust account. D. Hold until policy issuance is confirmed. Answer. Correct answer. C. Explanation. Under Indiana Administrative Code and IDOI regulations, producers must act as fiduciaries. Premiums collected on behalf of an insurer must be held in A trust account separate from operating funds or forwarded promptly to the insurer. Misuse or commingling of funds may lead to license revocation, fines, or criminal prosecution under Indiana Code SS 27115.61. This protects both insurer and client interests in financial transactions. Question 11. Under the assumption that Mr. Darnell Owens owns the small warehouse and has workers' compensation insurance, an employee sues him for negligence after suffering fall due to missing handrail. The insurer covers the medical bills but refuses to cover the lawsuit. What did Mr. Owens likely fail to purchase? A. Commercial umbrella liability. B. Employment practices liability insurance. C. Employer's liability coverage. D. General liability coverage. Answer. Correct answer. C. Explanation. Workers' compensation covers statutory obligations, medical care, lost wages, but employers' liability coverage protects against lawsuits for job-related injuries not covered under Stadtloose benefits e.g. negligence. Indiana Workers' Compensation Act requires employers' liability is separate Part B and must be included for broader protection. General liability and don't apply to on-the-job injuries. Question 12. From the perspective of peril selection in property policies, which of the following would be excluded under a basic causes of loss form unless specifically endorsed? A. Fire. B. Lightning. C. Water damage from a burst pipe. D. Explosion. Answer. Correct answer. C. Explanation. Under the ISO basic causes of loss form, perils like fire, lightning, explosion, vandalism, and windstorm are included. Water damage, especially from bursting pipes or plumbing systems, is excluded unless included through broad or special forms or endorsements. Indiana insurance policies using ISO standards require explicit inclusion of such perils. Agents must ensure clients understand this distinction to avoid coverage gaps. Question 13. Taking into account the digital expansion of small businesses is Sarah Mendoza operates a design agency. She unknowingly uses a copyrighted image in her ad. The image owner sues. What coverage would protect her? A. Property damage under commercial property. B. Professional liability EO. C. Personal and advertising injury coverage under CGL. D. Cyber liability coverage. Answer. Correct answer. C. Explanation. The CGL policy's personal and advertising injury coverage includes copyright infringement in advertisements, slander, libel, and misappropriation of ideas. Sarah's use of copyrighted image falls under this. EO covers professional mistakes. Cyber handles data breaches and property deals with tangible loss, not IP litigation. The Indiana-approved CGL forms include this under coverage B. Question 14. In the absence of timely claim reporting, what might be the insurer's most justified response if an insured delays notice of a covered fire loss for 90 days? A. Pay the claim minus depreciation. B. Deny the claim for breach of a policy condition. C. Automatically file a subrogation action. D. Reduce the premium retroactively. Answer. Correct answer. B. Explanation. Most property policies include conditions requiring prompt notice of loss. Indiana case law supports an insurer's right to deny claim if the delay prejudices the investigation or increases liability. This duty exists to prevent fraud and mitigate damages. Late notice constitutes material breach of contract under Indiana commercial insurance law unless the insurer proves lack of prejudice. Question 15. Considering the evidence, a construction firm held a dealer policy with $1 million per occurrence. An accident results in $2.5 million liability. The firm also had a $3 million commercial umbrella policy. How will the claim be paid? A. The umbrella policy pays all of it. B. The insured must pay the excess personally. C. The CGL pays $1 million and umbrella pays $1.5 million. D. The umbrella policy pays only if the CGL is exhausted by legal fees. Answer. Correct answer. C. Explanation. Commercial umbrella liability acts as excess coverage above underlying policies like CGL. Once the CGL limit $1 million is exhausted, the umbrella policy covers the remaining $1.5 million up to its limit. Indiana insurance law views umbrella coverage as a secondary trigger requiring exhaustion of the primary layer. Umbrella does not cover entire claims independently, nor only legal fees. Question 16. The foundation of general liability policies is the concept of an occurrence. What best defines an occurrence under Indiana-approved CGL forms? A. Policyholder's intent to cause damage. B. Repeated exposure to harmful conditions resulting in damage. C. Fraudulent acts committed over time. D. Claims reported after the policy period. Answer. Correct answer, B. Explanation. ISO in Indiana defined CGL policies define an occurrence as an accident including continuous or repeated exposure to harmful conditions, resulting in bodily injury or property damage. It's the triggering event for coverage. Not necessarily the claim date. Intentional acts and claims outside the period are typically excluded. This distinction is critical in understanding how liability arises and is insured. Question 17. With respect to liability for customers' property, Mr. Louis Patel runs dry cleaning business. Fire in his shop destroys customers' clothing. Which policy best protects him against legal claims? A. Bailey's customer coverage under inland marine. B. General liability for fire damage. C. Equipment breakdown insurance. D. Business income insurance. Answer. Correct answer, A. Explanation. Bailey's customer coverage, form of inland marine insurance, covers the insured's legal liability or direct damage to property belonging to others in their care. This is particularly vital in industries like dry cleaning, repair shops, or storage services. Standard property or liability policies exclude third-party property in custody, so endorsement is required. Indiana insurers often provide this through inland marine lines. Question 18. By evaluating the implications of building codes, which situation would most require ordinance or law coverage? A. Replacing damaged inventory. B. Repairing minor roof damage from hail. C. Rebuilding a structure that must now include fire sprinklers. D. Restocking stolen goods. Answer. Correct answer, C. Explanation. When a covered loss leads to reconstruction, ordinance or law coverage pays for increased costs required by current building codes, such as fire sprinkler systems, ADA compliance, or demolition of undamaged parts. Standard property policies typically exclude these costs. Indiana's adoption of ISO forms and building code enforcement supports this separation of coverage. Inventory, theft, and minor repairs fall under standard property terms. Question 19. Upon closer examination, Yvette NG files a claim for $12,000 in wind damage to her commercial roof. Her policy has a $5,000 deductible. How much will the insurer pay? A. $0. B. $7,000. C. $12,000. D. $5,000. Answer. Correct answer, B. Explanation. The deductible is the amount the insured must absorb before coverage applies. The insurer pays the difference. $12,000 loss minus $5,000 deductible equals $7,000 payout. Deductibles encourage risk sharing and reduce administrative costs for minor claims. Indiana law mandates clear disclosure of deductible terms in policy declarations. Misunderstanding deductibles leads to frequent disputes, hence the emphasis on disclosure. Question 20. The relationship between primary insurers and reinsurers exists to manage risk. What best describes the function of reinsurance? A. It shifts the premium burden to policyholders. B. It increases profits by avoiding claims altogether. C. It transfers some of the insurer's risk to another insurer. D. It is policy bought by policyholders to cover deductibles. Answer. Correct answer, C. Explanation. Reinsurance is a risk management tool used by insurers to protect against large or catastrophic losses by sharing them with other insurers. It allows the primary carrier to remain solvent and stable, particularly during large claims events. Indiana's Department of Insurance monitors reinsurance agreements under NAIC model guidelines, and this process is completely behind the scenes to policyholders. Question 21. Through the lens of employer obligations, Mr. Tyson Carter's tech firm is sued by former employee for wrongful termination and alleged workplace harassment. His current general liability policy denies the claim. What specific coverage could have addressed this exposure? A. Commercial property insurance. B. Professional liability insurance. C. Employment practices liability insurance. D. Workers' compensation insurance. Answer. Correct answer, C. Explanation. Employment practices liability insurance typically covers employment-related claims like wrongful termination, discrimination, harassment, or retaliation. CGL policies explicitly exclude these risks. Under Indiana insurance regulations, an ISO endorsement typically is generally a standalone or optional endorsement that must be added. Workers' compensation handles bodily injuries, while professional liability addresses errors in professional services. Not HR-related legal liability. Question 22. The general consensus is that if the policy contains complex technical language that contradicts an applicant's understanding, even if the language is legal, courts may still rule in favor of the insured. What principle supports this? A. Doctrine of aleatory contract. B. Indemnity principle. C. Doctrine of reasonable expectations. D. Legal capacity doctrine. Answer. Correct answer, C. Explanation. The doctrine of reasonable expectations ensures that policyholders are not misled by obscure or inconsistent language. If a reasonable person would not expect a certain exclusion or condition, the court may interpret the contract in favor of the insured. Indiana courts recognize this under consumer protection principles, especially when ambiguous language is present. This reinforces that policies must be transparent and comprehensible. Question 23. While examining logistics coverage is Alana Rivers imports textiles via overseas shipping. A large wave damages a cargo mid-voyage. She attempts to file under her inland marine policy, but the claim is denied. What policy should she have purchased? A. Ocean marine insurance. B. Business income insurance. C. CGL. Product liability coverage. D. Crime insurance. Answer. Correct answer, A. Explanation. Ocean marine insurance covers property shipped over international waters, including cargo, hull, and freight exposures. It is distinct from inland marine, which covers domestic transit. Indiana insurers classify these separately under marine lines. Inland marine will not cover losses during overseas shipping, NARD, CGL, or business income address transit loss. The ocean marine policy is governed by Admiralty and maritime law. Question 24. The validity of an insurance policy rests on certain contract characteristics. Why is an insurance policy considered an aleatory contract? A. Only one party makes a legally binding promise. B. It requires the insured to act with utmost good faith. C. The exchange of value is unequal and depends on a future uncertain event. D. It cannot be enforced unless it is signed by a public notary. Answer. Correct answer, C. Explanation. An aleatory contract involves unequal value exchange dependent on uncertain events. The insured may pay premiums for years without a claim or receive large claim payments after a small premium. Indiana law treats all insurance policies as aleatory in nature under the Unfair Trade Practices Act, recognizing that risk transfer involves uncertainty and disproportionality. Other answer choices describe different doctrines, e.g., unilateral or utmost good faith. Question 25. With the advent of commercial construction, Mr. Rafael Blanco begins building a small hotel. Midway, a windstorm destroys the framing. His property insurer denies coverage. Which type of policy should Mr. Blanco have secured during construction? A. Ordinance or law coverage. B. Builder's risk insurance. C. Completed value commercial property policy. D. Business income and extra expense. Answer. Correct answer, B. Explanation. Builder's risk insurance provides coverage for structures under construction, including materials, supplies, and partially completed work. Indiana commercial insurers typically offer this as a separate policy from standard commercial property insurance. Since the hotel wasn't yet operational, no B or property limits applied. Builder's risk is often written on a completed value basis and ceases upon completion or occupancy. Question 26. Contrary to popular belief, not all incorrect statements on an insurance application lead to policy cancellation. Which type of misstatement can legally justify a claim denial or contract rescission? A. A typo in the named insured street name. B. Incorrect zip code entry by the agent. C. Omitting the existence of previous liability lawsuit. D. Spelling errors in business description. Answer. Correct answer, C. Explanation. Only material misrepresentations, statements that would affect the insurer's decision to issue the policy or set premiums, can justify denial or rescission. Failing to disclose past lawsuit materially alters the risk profile. Indiana Code SS 27414 provides for cancellation in cases of material fraud or misrepresentation. Typographical or clerical errors are not typically considered material unless they impact rating or eligibility. Question 27. The most significant aspect of coverage designed for Mr. Omar Nash, who owns a restaurant, auto repair shop, and bakery under one LLC, is policy efficiency. Which policy structure offers the best flexibility for combining multiple coverages under one contract? A. Business Owners Policy BOP. B. Commercial Package Policy CPP. C. Inland Marine Insurance. D. Surety Bond. Answer. Correct answer. B. Explanation. A commercial package policy (CPP) allows businesses to combine property liability, crime, inland marine, and other coverages under one modular contract. For very business operations like Omar's, CPPs provide the customization needed. Unlike BOPs, which are more standardized and limited to low-risk small businesses, Indiana insurers must comply with filing regulations for CPP components under IDOI rules. Question 20. In a modern context of digital operations, what is the main reason a standard CGL policy is inadequate for covering data breach incidents? A. CGL only covers physical damage and bodily injury. B. Cyber liability is automatically included under general liability. C. Insurers are prohibited from covering cyber losses in Indiana. D. CGL policies cover breach notifications only. Answer. Correct answer. An explanation. CGL policies cover tangible property damage and bodily injury, not data breaches, cyber extortion, or network liability. Cyber liability coverage is typically excluded or severely limited. Indiana insurers follow ISO CGL exclusions for electronic data, making separate cyber policies essential. This includes coverage for breach response, regulatory fines, third-party claims, and business interruption due to network outages. Question 29. Looking at the data on fire losses is Jennifer Lee runs an architecture firm. A fire destroys her original blueprints and signed contracts. Which endorsement provides reimbursement for the cost to recreate these items? A. Business income coverage. B. Professional liability coverage. C. Valuable papers and records coverage. D. General liability insurance. Answer. Correct answer. C. Explanation. Valuable papers and records coverage pays to restore or replace essential written, printed, or electronic documents destroyed by a covered peril. Indiana commercial property policies exclude intangibles unless this endorsement is added. It's especially critical for firms dealing with irreplaceable client records. General liability and B don't cover property loss, and professional liability applies only to negligent services. Question 30. Across different scenarios, Indiana insurance producers may come across surplus lines carriers. Which statement best describes an unauthorized insurer? A. An insurer licensed in another state and also in Indiana. B. A company licensed in Indiana to sell health insurance. C. A non-admitted insurer that may only write certain risks through surplus lines. D. An insurer operating entirely without state or federal regulation. Answer. Correct answer. C. Explanation. An unauthorized, non-admitted insurer is not licensed in Indiana, but may write specific risks through licensed surplus lines brokers per Indiana Code SS 27115.5. These insurers serve high-risk or unique markets not covered by admitted carriers. They are subject to less regulation, but still monitored. Producers must ensure proper disclosure to policyholders regarding non-status and lack of IDOI protections.